Oil prices are likely to go up again in August, according to the IEA, as oil demand reached record levels in June globally. We were over 103 million barrels a day for the first time. And it comes as we're only producing less than 101 million barrels. And a big reason is because Saudi Arabia has tightened supply. Joining us now for more, Bob McNally is Rapidan Energy Group's founder and president and author of Crude Volatility, the History and the Future of Boom-Bust Oil Prices. Bob, it's good to see you. So has the upward move largely behind us now? It looks like we're kind of settling out here in the 80s. And at some point, if we head upwards of 90, wouldn't Saudi respond with some production and take advantage of those prices?
Hi, Kelly. I think we're in, as we discussed a couple weeks ago, a bullish move here. We think oil prices, crude heading well into the $90 range, 100 entirely possible on a daily print before the year's out. But it'll be choppy. Oil prices are climbing a wall of doubt and skepticism. Traders were head faked by the lack of the Russian disruption last year that sent crude to 130. And there are plenty of macroeconomic risks. We're dancing in a macro minefield now with every rate hike and so forth. So there are good reasons to be skeptical. Traders are not buying into it. But fundamentals are fundamentals. OPEC Plus is going to put a huge deficit into the market in the second half. We're starting to see that. And that should send prices higher. And I don't think the Saudis back off at 90 or 92. I don't think they have a price target in mind. I think they want to be sure that the deficits they hope to create are materializing before our eyes before they decide that to take the foot off the brake there.
Sure, and I mean, I understand that, but, so let's kind of back up for a second. We are running a 2 million barrel a day, if not more, deficit. So to fill that gap, everyone's running down their crude stocks. We talked about this with Amrita Sen last week. We had an 8 million barrel draw here. She thinks we'll probably run out of our excess inventories by the end of the year, leaving 2024 more vulnerable to oil price swings or upward shocks, which I don't think the president would want. So what are the choices and options here?
Well, the president doesn't have very good options. They range between inconsequential and then disastrous, really bad and counterproductive. That's the gamut. Unfortunately, I know I worked for President Bush. I've been in those shoes. But there's just no magic wand. The DOE SPR draws were his main response last year, but I don't think DOE wants to do any more. They stopped the refilling, but I don't think they'd agree to another draw. However, if the White House wants it, the White House gets it, Kelly. If we go to $4 gasoline, can't rule out more SPR draws. Other than that, ease up on Venezuela with sanctions a little bit, maybe a wink and nod to Iran, let them export a little bit more as part of this hostages for cash deal. You can get some dribs and drabs there, but there really aren't any good options. The best option he would have is to convince Saudi Arabia to ramp up production. And there's this bigger negotiation underway that's been reported between the Biden administration and the Saudis. That's not going to come to fruition anytime soon. I don't expect it to change Saudi policy, but that's probably the best option the president has right now.
So I'd actually be curious what you think that larger negotiation hangs on. Again, a 2 million barrel a day global deficit. I'm not sure Venezuela or Iran could do much. And you really think that we would draw down the SPR instead of trying to refill it?
Well, we should step back. So we're all projecting a 2 million barrel a day deficit. That remains to be seen. It's in our balance.
Didn't we have that in July, though? Isn't that what the IE or June?
No,
103 versus 101?
I don't think we're seeing a 2 million barrel a day deficit in 1 month yet. I think, and that 8 million barrel a day draw was in crude stocks in the U.S., not products. Products didn't drew. U.S. total liquids didn't really draw. So look, we're starting to see it. Oil on the water, product stocks in Asia, but it is way too early to say that we're digging that 2 million barrel a day hole based on the lagged and impartial data, or partial data, I should say, that we get in the oil market. And the Saudis have to be concerned that we're in 2008. Remember, this is risk management for them. For all we know, we're about to blow up another bank and the economy will collapse, and crude could be at $40 by December. That's a real risk. So the Saudis want to cut against that risk. So way too soon to conclude that the job is done. Way too soon.
So then what kind of announcement do you think would be next then on the SPR? Recently we saw, I think, that they didn't want to refill at these prices, feel like they're a little bit high. So what do you think is the next move in that direction?
Well, if oil prices keep marching higher, as I expect they will, I think at some point, maybe early next year, the president will consider another SPR draw. He will try to convince other IEA countries to draw with him, as he did in November of 2021. Even though there won't be a supply disruption, there'll be pushback to that. But I think early next year, entirely possible, we'll have another SPR draw. But the worst things would be export restrictions, Kelly. If he feels that he can't draw down the SPR anymore because it is already at 40-year lows and the world's still a dangerous place, he doesn't want to do that. His next option, and it's a terrible one, is to restrict the export of gasoline and diesel from the United States. There, our inventories are quite low, and refinery margins are quite fat, and product prices are high. So that would be an awful option. He has the authority to do it. I hope he won't. It wouldn't work for very long. Maybe you get a day or two of relief, and then you get refiners would drop runs, and we'd end up with even higher gasoline prices down the road. But it is an option. They looked at it last summer, seriously looked at. They ended up going with the SPR. If they feel the SPR isn't there for them, they may go to export restrictions. That's a very bad day for refiners in the United States, by the way.
Interesting.